Alrighty, welcome to the third edition of Templar Trading Stock Talk. This time it's on a Monday, not a Sunday, because we have a 3-day weekend. Hope you guys are all enjoying it. I know a lot of the people are dealing with the winter storm down south and on the East Coast. And for that reason, I'm glad I'm recording this, because there's a couple people that have already reached out saying they're going to miss it, but no big deal. This one's going to be a little bit different this time around. We're not just going to be looking at charts. I went ahead and put together a kind of beginner's guide to picking and finding long-term investments, and I'm talking from 1 year to 5 years to lifers. And I think this will be beneficial for a lot of people. Obviously, we do a lot of day trading, swing trading in here, but in terms of great growth and long-term investments or retirement accounts, always good to be stockpiling your money into longer-term investments. There's tax benefits, and yeah. So obviously, starting off, we always like to look at the major indices. And as you can see, we are incredibly short-term extended on the S&P 500. There's a lot of mixed sentiment going out right now. We have your CNBC, your Fox Business all preaching that a crash is coming, somewhere between 20 to 40%. It seems really like a lot of fear-mongering to me. I mean, I'm not going to deny we are incredibly short-term extended here. You can see we're pushing up against the short-term expanding channel that we've been respecting since back in November. And this is pretty similar on QQQ and NASDAQ, more so QQQ than NASDAQ. But let's take a look. Yep, once again, also pushing that upper level. If we go over to the weekly chart as well, you can see we are on quite the bull run, kind of bullish pennant, kind of symmetrical triangle breakout and continuation. If we look at the weekly chart for SPY, same idea, except this is something that's even more interesting. You can see we've got this decade-long resistance that we broke back in October. And now, once again, this short-term resistance on the weekly chart, we are pushing up against it even more. You can see the candles actually pushing that zone. So what does that mean? It can mean one of two things, obviously. A, we reject this zone and we continue to fall further. How much further? Obviously, I'm not going to make guesses, but I've got multiple zones here kind of pinpointing to where I think SPY will pull back to. A lot of people are expecting a huge drop, kind of like what we saw in October and November. And honestly, it's possible, it definitely is. But at the same time, by looking at the major indices, looking at specific stocks, FANG stocks, the big market movers, I think we're due for a pullback, but I don't think it's going to be as extreme as most people are expecting. And I say most people, like the media. If we do pull back, obviously you can see we've kind of respected this short-term support for the last couple months. We did dip below here on that one scary day, but the buyers came in pretty quick and bought it right back up. And so now I guess this next week is going to be a really pivotal moment. We'll see a huge breakout over this short-term resistance, or B, a retracement back to support. You can see this 50-65 Ma cloud that I've spoke with you guys about before, that I use on a lot of my long-term investments. But you could see that we dipped below the 50, but didn't quite approach the 60. So the three major areas of support that I'm looking for are kind of go involved with this the shelf here. 371.95, big support zone on top of the shelf. Bottom shelf 365.29. And then we've got these anchored VWAPs. If you guys aren't familiar with this was created by a trader named Pattern Profits on Twitter. Great guy, huge inspiration for me chart-wise. But what he found is that if you pin these anchored VWAPs to the major trend reversal candles, so you can see we got an uptrend here, consolidation and a dip, and then an uptrend here, the stock will tend to treat it as a short-term support. So obviously we came down and tested that anchored VWAP twice and then continued this bull run. I anchored a new VWAP to this second dip in October, and now you can see that it's been respecting it pretty hard, including with this big dip here and the smaller dip here in the end of January. So we'll see what happens. I'm still incredibly bullish on the market. A lot of good things are coming. A lot of great rotations seem to be happening, and I'm going to go and show you some stocks that make me think that towards the end of this stock talk today. But let's go ahead and jump into let's do McClellan oscillator. So I've talked about this before, but the McClellan oscillator kind of shows the oversoldness and overboughtness of the overall markets. And so we see that even though we pushed all-time highs on Friday, we actually had a drop in the McClellan oscillator down to the 1850 zone. This has happened before. We saw back in November when we had these dips, November and October. It dipped and then continued upward, dipped, continued upward. So obviously we could continue and break out to higher highs above this short-term resistance, or we can have a big fall, kind of like we did back here. But time will tell. Okay, so now we're gonna go straight into my rules for picking stocks or companies or ETFs for long-term investment. And then full disclosure, I forgot to do this in the beginning. I'm a full-time realtor. I'm not a financial advisor. Everything that I'm saying is strictly my opinion. I think it's invaluable to bounce ideas off of one another, see other investors and traders' perspectives, because you can get stuck in your own bias, and obviously that's not a good thing. So yeah, let's dive right into it. I've got a handful of rules here. I think we got 9. Okay, so does the company solve a problem? This goes hand in hand with like Kathy Wood and ARC. Obviously, and I learned this in business school as well for marketing, which I have my degree in. Every commercial you ever see, there's one goal, and that's to solve a problem. So think about that next time you're watching a Super Bowl ad or something. It's actually quite interesting to go over. But yes, the company must solve a problem. Secondly, will the company be around for 10 years? This 10 number is completely subjective. Basically, will this be an everlasting idea or for at least the next couple of years? Does the company change the way we traverse through everyday life? This goes hand in hand with solve a problem. Does the company have consistently increasing revenues quarter over quarter, year over year? If the company is not profitable, how long until it is? And obviously there's a lot of companies that are operating without profit, and that doesn't necessarily mean they're a bad company, right? Look at Tesla. Tesla is one of the biggest companies in the world now, and they didn't turn a profit for the longest time. So if they don't have things like increasing revenues and sales, there's companies that are subscription based like Peloton or Fubo, any of those guys. So the numbers that you're going to want to look at kind of differ by industry. Software as a service subscriptions are going to be huge, like Disney and Disney Plus. That's a huge number for them. That's a big chunk of their income now. When I'm looking for specific companies, I'll typically look for 20 to 30% increases in revenue, sales, subscriptions each year. I'll prefer the younger companies with the ability to grow exponentially compared to companies that are established and have a $2 billion market cap or more. The reason I say this as an example, it's easier for Peloton, which is a younger company, to double their market cap or value compared to Apple, a $1 trillion market cap, for them to double their company size since they've been around so long. And that's just a very basic reason as to why I do that. So look for the next Apple, right? You can jump on your Microsofts, your Apples, your Googles, and probably do fantastic. But for my type of investing, I look for shorter term and look for the next big innovation. You must be passionate about the company, and this goes hand in hand with trading in general. Obviously, we have a big passion for investing and trading. If you're not passionate about the company that you're investing in, why would other people invest in it? If you're not enthralled, absolutely love the company or their product, then there's no point in investing in them. Assuming you still use, so this was actually made for my sister, so this is a directed at her kind of thing. But assuming you still use Pinterest pins, that would be a good example of a company that you use, like, and believe in. Next step would be to look at their financials, projections for the next few years and last few quarters. Pinterest has been a phenomenal stock to own. And then rule 6, kind of a joke, but honestly a really good one, and I've made good money on some of these companies. But happy wife, happy life. If women love the product, look to see if they're a publicly traded company. Examples of fantastic companies would be Peloton, Pinterest, Lululemon, Starbucks, basically the Becky ETF. All these guys are pumping out great numbers, great subscriber increases and revenues. So it's just a little cheat. 7, zoom out. When analyzing the stock chart, go as far back as you can see how it's moved over the years, if available. And then this is my personal opinion. You don't have to follow this, but this is just kind of for me and from what I've seen over the last couple of years. Don't invest in IPOs, and I guess I should have clarified like out the bat or out the gate. They could be successful, but more often than not, IPOs will have a massive amount of buyers on release day and then sell off for 6 to 9 months before breaking out of that IPO base. I guess a really good example of something that's a fantastic company but has yet to break out of that IPO base is Rocket Mortgage, right? Or Rocket Companies. Their fundamentals are absolutely phenomenal, but for whatever reason, we just cannot stay over this $24 range. I'm invested in Rocket. I think this is a great company, but I also added this rule after I bought into Rocket. And knowing what I know now, I would probably wait for that base to break. Corsair is a good idea, or a good example of another one as well. But you know what? At least Corsair is still on that gradual uptrend, And it does look like we're going to be pushing upwards pretty soon here as we broke that tier 1 resistance, but we'll keep going on with this. If you believe in IPO and want to get in early, be prepared to pay a premium. Paying more for quality is completely normal and completely okay. Just be aware that you are going to be paying that premium. And then lastly, and this is for that long-term approach, invest with the mentality that you will not take that money out for 3 to 5 years or until your thesis as to why you are invested breaks. So those 9 rules, I think, are a pretty good bare bones assessment on how to find a good company. So I'm obviously going to post this in resources for you guys to keep and you guys to use when you're looking for your next big investments. Next, how and when do I invest? The best time to start investing was yesterday. We've heard that many times before. Time in the market beats timing the market. That's a Warren Buffett quote, the GOAT himself. The strategy that I use and that you should use is called the dollar cost averaging. To understand how dollar cost averaging can benefit you, you need to compare it to other possible buying strategies, such as purchasing all your shares in a lump sum transaction. I'm going to briefly go over 4 different scenarios, I believe, that kind of go on to explain why dollar cost averaging can benefit you, and depending on market sentiment as well, how it affects it. So scenario 1, lump sum purchase. First, let's see what happens with a 10K lump sum purchase of ABCD stock at $50, netting 200 shares. Let's assume the stock reaches the following prices when you want to sell. The column on the right shows the gross profit or loss on each trade. So sell prices $40, negative $2,000, $60, $2,000, $80, $6,000. So this is the baseline scenario, just with a 1 lump sum purchase. Okay. Now let's say the market is bearish. We're going down, the S&P, NASDAQ, everything is kind of on a consistent downtrend. This is where, dollar cost averaging will get you the most bang for your buck. Let's assume that $10,000 is split equally among 4 purchases at prices of 50, 40, 30, and 25 over the course of a year. Those 4 $2,500 purchases will buy 295.8 shares, a substantial increase over the lump sum purchase. Let's look at the profit at those sell prices again. So instead of losing 2K off the bat, on the $40, you're going to actually lose less money. $60, you're going to make more money, and on the $80, you're going to make more money as well. With dollar cost averaging, you actually have an overall gain at $40 per share of ABCD stock, below where you first started buying the stock. Because you own more shares than in a lump sum purchase, your investment grows more quickly as the stock's price goes up, with your total profit at an $80 sale price more than doubled. Okay, and then this is in a flattish market. Let's assume that $10,000 is split equally among 4 purchases at prices of 50, 40, 60, and 55. Those 4 purchases will get 199 shares, basically what a lump sum purchase would get you. So the payoff profile looks nearly identical to the first scenario, which is just going ahead and gung-ho buying 10K of a stock. The difference is markets and stocks can often move sideways up and down, but ending where they began for long periods. However, you'll never be able to consistently predict when the market is heading or where the market is heading. So in this example, the investor takes advantage of lower prices when they're available by dollar cost averaging, even if that means paying higher costs later. And then the last scenario, and this is the only one that isn't as great, and that's in a rising market. And obviously right now we are in a rising market. So a lot of my long-term holds I haven't really added to in recent months just because we've been on such a crazy bull run. But let's go ahead and go through this scenario so you can see that this is where kind of dollar cost averaging does not do as well. So let's assume the same $10,000 is split into 4 installments at prices 50, 65, 70, and 80 as the market is bullish. These purchases would net you 155 shares, and here's the payoff profile. $40, negative $3,000, $60, negative $676, $80, 2,472. So you can see much less than what we had in the last 3 scenarios. So this is the one scenario that appears weak, at least in the short term. The stock moves higher and then keeps moving higher, so dollar cost averaging keeps you from maximizing your gains. You're constantly adding to your average, increasing it, compared to a lump sum where you would have caught at the bottom pretty much. So why is dollar cost averaging safer, even though that in a rising market it can be less beneficial? Well, you're going to avoid mistiming the market. Anyone that's trying to time the market, we're not sightseers, we're not fortune tellers. It's not our job. We're supposed to play around what the market is telling us. You can avoid mistiming the market it also takes emotion out of investing. If you just know to buy, a dip on whatever moving average you feel is comfortable. For me, it's usually that 65 day moving average. That's where I'm comfortable adding money, not worrying about the future of, the price action. I just know that it's on sale at that current time. And then obviously, when should you buy? The stock is down, buy the blood. And this is basically what I just said on the same thing. ETF investing is the same, buy the dip. Let's see. Stocks move in waves due to supply and demand. Be prepared to see your investments move. And then lastly, diversification. You need to come up with this on your own. Never put all your eggs in one basket is the takeaway. And so this next one is specific to me, and I'm talking strictly my retirement account and my long-term accounts. I'm invested in 5 specific companies and then 5 different ETFs, and that's it. A lot of people will do more. Some people will hold upwards of 40 stocks, and that's totally okay too. And it can be, a lot safer because, in terms of diversification, I'm still very, very tech heavy. So if we ever do see a tech turn down, I'm going to feel it extra hard. But at the same time, I also don't have to keep up, every day with the goings of 40 or 30 companies. So that's just my personal preference. And then obviously the ETFs are incredibly safe. So I've got my SPY, I've got my QQQ, I've got my NASDAQ. Actually, I don't have NASDAQ anymore. And I've got a couple ARK funds. And I recently just added subs too. Yeah. So even though I hold a lot of tech, I still try to diversify through different areas of that tech. So like health, energy, finance, software as a service, space, advertising, etc. All these industries, although they are in tech, they're pretty different. Okay, now these are going to be the investment funds, ETFs that I like or are invested in. So I just mentioned subs, and this one is brand new. So if you guys aren't invested long into some ETFs, this is one that I think is incredibly exciting because if you look at these names, it's pretty damn stacked. And we've seen subscription-based companies absolutely take off in the last year. And obviously they've been propelled even more so by the pandemic and that craziness. But yeah, so subs came out last week holding Roku, Netflix, Spotify, all these great companies. And I think this is going to be something to keep your eye on in the weeks and the months and the years to come. Roundhill Capital, pretty good. So another one from Roundhill Capital Nerd. This kind of goes hand in hand with being passionate about what you're investing in. So most of you guys know I grew up playing a lot of video games. Esports has always been something that's super interesting to me. And now to be able to put my money in something that's a little more safe than just going gung-ho on one company that might not make it, right? The esports is a young industry. I'm sure there's going to be up-and-coming companies or teams or whatever it is. So to be able to diversify among many, and Nerd is super cool. So I am invested in Nerd. They've got quite the lineup here. You've got Activision, Corsair, Razer, what else? Tencent is huge, Skills is huge, actually a SPAC that I missed out on. I was very excited for, but yeah, this is another great one in my opinion, and one to keep your eyes on. You can see we're incredibly extended on this too. If we pull up the 50-65 MA on this guy, let's take a look. Always look for that key moving average that it wants to respect. So it is respecting the 50-65, but honestly, it's also respecting the 20 MA, right? This is a 20-50 MA cloud. So if we get that dip back to the 20, might be a good long entry, honestly. Okay, moving on, we've got bets, the other Roundhill one. I'm not invested in this one, but I think this is pretty huge. They've got all sorts of companies in here. Penn, DraftKings, Canby Group, Flutter, all great companies, great returns, great charts. I honestly think that legalization of gambling, and I mean, it's only legal in a couple states right now, but I know there's talks of legalization in California. I think this will be huge in a couple years, and obviously looking at this chart, you can see it's already made massive gains this year. So one to watch. I'm not completely sold on these guys, but I do like Roundhill and where their head is at. All right, now we're on to our girl Cathie Wood. If you guys aren't invested in Cathie Wood, you should be. I'm not saying she's the way, but right now she is the talk of the town. And honestly, I'm a huge fan of her mentality of investing in innovation in companies that are trying to change the world. I think that's a really cool outlook and also a really cool way to position yourself in the markets. So the first one, ARK, which is disruptive innovation. You've got Tesla, huge holding in Tesla, so keep that in mind. Roku, Teladoc, which is changing the healthcare space right now. Square, who has, recently implemented crypto, and digital payment has become more used than ever before. Zillow, as a realtor, I know Zillow is actually my #1 competition. So I'm kind of bummed that I missed out on getting on these guys. Zillow and XP have had tremendous years so far. But they're a game changer in the real estate space, so this makes total sense to me. CRISPR, Baidu, all these great companies, Shopify as well, which is changing the way that we shop, right? Shopify making, everyday people like you and me able to create a store online. It's a game changer, and these things are going to be here for a long while, at least in my opinion. That 3 to 5 year window is definitely relevant for all of these guys. Let's see. ARK defines disruptive innovation as the introduction of a technologically enabled new product or service that potentially changes the way the world works. Companies with ARK-K include those that rely on or benefit from the development of new products or services, technological improvements, and advancements in scientific research relating to the areas of DNA technology. Very cool. Kathy Wood preaches genomic revolution. I don't know if genomic, either way, whatever. As one of the biggest, innovations. So that's something to keep your eye on. I know Paul recently was talking about that as well. But yeah, something to keep your eye on for sure. Moving on to ARKQ. ARKQ is the technology and robotics ETF. And obviously automation is huge right now. Self-driving cars are being developed every day. San Francisco, they're literally everywhere. So this also includes 3D printing, energy storage, space exploration, which is super exciting to me personally, robotics, automation. Obviously these things are going to be huge in our everyday life and only continue to grow. Their top 10 holdings, obviously, once again, Tesla, Baidu, JD, which is actually an interesting one to me. I'm actually a big fan of the fundamentals of JD. Only kicker being that it's a Chinese company, but give and take. You got Deere, which is interesting to me, and Alphabet, etc. All right, then we got ARKW. ARKW is the next generation internet ETF. I don't have ARKW. I feel like there's more important ones, and I have a lot of these other holdings and other ETFs, but ARKW is still a good one. They're focused and expected to benefit from shifting the basis of technology infrastructure to the cloud, enabling mobile, new, and local services, such as companies that rely on or benefit from the increased use of shared technology, infrastructure, services, internet-based products, and that's services twice, new payment methods, big data, the Internet of Things, etc. So to narrow that down, cloud computing, e-commerce, mobile technology, blockchain, and social platforms. Just another great diversified portfolio here. And ARKG. Companies within the ARKG are focused on and expected to substantially benefit from the extending and enhancing the quality of human and other life by incorporating technological and scientific developments and advancements in genomics into their business. The companies held in ARKG may develop, produce, or enable CRISPR, targeted therapeutics, bioinformatics, molecular diagnostics, stem cells, which is huge right now, as well as agricultural biology. Very cool. And some of their holdings include Teladoc, which is medicine once again, Fate Therapeutics, which has been on my watch list for a couple weeks now. Twist is huge, Regeneron is huge. So yeah, this is more medically focused. And then lastly, ARKF. As beautiful as this chart is, I have a hard time investing in the financial sector just because, especially with the whole Bitcoin thing going on, I feel like it's like direct competition. So I'm not invested in ARKF, but it's another good one. And they're invested in transaction innovations, blockchain technology, risk transformation, frictionless funding platforms, customer-facing platforms, and new intermediaries. Square, one of their biggest holdings, or the biggest. Zillow, which is actually really cool to see. PayPal, Tencent, Pinterest, SE Limited, which is one of my biggest holdings. Mercado Libre, great. This is like the Amazon of South America, I believe. Shopify, etc. Great holdings there. Okay, and these are some other ETFs. Obviously, TAN, solar. With the Biden administration, we know clean energy is definitely on the agenda and pushing towards it. So this is one that has had a phenomenal year thus far, actually just a phenomenal couple months. So it's kind of hard to see if this is going to be a FOMO entry or if this is something that really could really be a game changer. Let's go ahead and look at the chart for TAN real quick, and not the daily, but the weekly, and I'll tell you why it's still kind of piquing my interest. Okay, so you can see when TAN came out here in January of 2009, we had that initial buy-in period all the way up to $113 or whatever the pre-split amount was, and we're just now touching that base. So to me, this kind of looks like an IPO base breakout. We'll have to see if we can hold this 112 area. I might be interested in getting a long position here. I don't think solar is going to be something that's a 10-20 year investment per se. I think it's just not as effective as other clean energy methods. It's got a limit, right? With the sun, and obviously like positioning of the sun, how many hours a day. There's a lot of limits to what you can do with solar. And I've done a lot of research on that personally, just because obviously if I'm going to put a good chunk of my money into it, I need to know these things. So I think solar right now, on top of the hype and the FOMO, I think for the next 3 to 5 years is a good investment. So I will be looking to add TAN to my portfolio pretty soon here. I didn't put the marijuana ETF in here just because it's so extended. I don't know if this is going to be another 2018, but MJ or marijuana stocks are definitely something else to look at. I just don't know if it's completely blown out of proportion already. I'm not even going to go through some of these stocks because these are a lot of the smaller solar companies. JKS being my favorite out of all of these. SPWR is pretty good as well. DACO Energy, SEDG also very, very prominent. Obviously S&P 500. I'm not even gonna go over this, but this is an incredibly safe bet for any portfolio, any retirement account. Just buy and leave, dollar cost average, and you should be pretty solid here. This is kind of the breakdown of the S&P, which kind of shows how important diversification is. You got information technology, 27%, healthcare, consumer discretionary, communication, financials, industrials, staples, utilities, etc. Right? Real estate 2%, excuse me, and energy 2% because these ones are struggling right now. QQQ is just the Nasdaq equivalent, pretty much the S&P 500. So it's completely preference as to what you want to invest in, but you can invest in both, but I would usually just pick one. QQQ is very tech heavy, industrials, consumer cyclicals, telecommunications, healthcare, utilities. Top 10 holdings: Apple, Microsoft, Amazon, Tesla, Alphabet, which is Google, Facebook, Nvidia, PayPal, Netflix. So all absolutely fantastic companies. And that is it. That's it for my little long-term investing guide. So I'm gonna put this in resources and I'll pin it for you guys. I don't know if any are interested, but either way, at least if you can have any one takeaway from this is set yourself some rules and write them down so that whenever something happens that you're not prepared for, you have a set of rules that are written in stone or written on paper or whatever to follow. So cool. All right, and then let me see here. I said I wanted to go over favorite ETFs, dollar cost averaging. Okay, live TA. Now the last thing I'm gonna do, we're gonna go to the charts because I can't go a day without talking about my favorite charts. So we're gonna go ahead and go to my watch list or focus list for next week, which is February 16th. And we're gonna start off with Plug Power. And for time's sake, I went ahead and already charted these out, but I will walk you through why I like these charts. And let me turn this off real quick. Okay, so Plug Power, obviously super hot with the EV sector. Fundamentally, I'm not as sold on. I'm not sure what their projections are for revenue increases and all that. But right now, the chart, and I'm a chart guy, the chart more than anything looks absolutely phenomenal. We've got a bullish pennant here over, I think, like a 3-week base. Let's see, 4-week, 5-week, 3-week base, 4-week base. And completely respecting the support trend multiple times. 1, 2, 3, dipped a little bit below, and then 4 as well. I'm gonna be looking for a starter entry on Monday for this 100%. I definitely will have a tight stop here, an actual physical stop, because you can see with this huge volume gap, this thing could fall quickly. Another important thing to know about Plug is they do have earnings on the 4th. So we do have a little bit of time, but we might get that breakout in anticipation of earnings. Let me go back to my stock talk window so I can see if there's, okay. So bullish pennant, 4 weeks trading in a channel. Anchored VWAP, you're going to see these on a lot of my charts. Obviously, the anchored VWAP is literally just anchored to the big trend reversal candle, and it can kind of show short-term resistance, or excuse me, short-term support. Okay, that's plug for you. JKS, I actually just mentioned while we were talking about TAN, but JKS is in this insanely long 6-month or 18-week base, and they had a monster move after their last earnings. So I'm going to go ahead and pull up Thinkorswim and let you guys see this. So you could see back on September 22nd, we had we beat earnings. I just know this from, you know, I played this run actually, but we did beat earnings substantially, and we had this amazing power earnings gap up. And since then, we've been trading so consistently in a range. And it's beautiful, really, because what this means to me is that people respect that this is where people want to buy the stock, and this is where people are going to sell the stock. This is where it wants to be bought. This is the newfound support and what people think is appropriate. Ideally, we would love to see, you know, this kind of go back down to our anchored VWAP as a prime entry, but I'm thinking about getting a starter on this one as well. They do have earnings coming up on, I don't remember now, the 12th, so we do have time here. And who knows, we might see another power earnings gap up, right? Since we got one last time, it's not for sure, but either the anticipation or the actual earnings, we could see a pretty big move here. So this is definitely one to keep your eye on. I also started putting these anchored VWAPs on the, you know, the peak of these breakouts, and what that does is it kind of creates this pinch zone, and a lot of the time the anchor VWAP will eventually close until they're almost touching, and then you'll see the breakout. But if we do see a break above this volume shelf, it'll also be a break over the anchored VWAP. Incredibly bullish in my opinion. You can also see that I have two resistance trends right here. If we break out above both, it's a point of confluence. It's just basically a stronger breakout in my opinion. Okay, let's move on to NVCR. Okay, NVCR, if I'm remembering correctly, was another power earnings gapper. Let's take a peek here. Yeah, so you can see back in 7/30, was that July? Yeah, July we had this gap up from $68 to $76. And it's been on quite the bull run since. We actually have earnings coming up on the 25th, so sooner than later. We're pretty much at all-time highs here, so I'm not necessarily looking for an entry now, but I do want to see this break out and then come back to test this resistance to support, and then we might just be able to catch this next leg up. You can see from here we didn't actually retrace as we do on a lot of these bullish patterns, so there's potential that I'll miss it, but at the same time, we'll have to wait and see on that. Weekly chart looks even more bullish, right? We can see that the flag is just clearly broken out, and that's why it's super important to look at different time frames. I obviously trade off the daily, but you know, zooming out to the weekly and then seeing what's actually happening in the intraday price action is incredibly important. So this looks really bullish to me, right? If we go back to the last kind of pennant we had, it was a 2-week just gap up. So we'll see what happens with NVCR. It's definitely on the watch list for me. NET, this is another power earnings gapper. I'm not even going to go over to Thinkorswim because I can tell you right now it was right here in October. And then we had this kind of falling bull flag, breakout, bullish pennant, breakout. And now we've kind of been trading in a zone here since late December. We did get this false breakout and then drop down to the volume shelf at 84.39. I really like this big volume candle here on Friday. That seems incredibly bullish to me. This may be that retracement of previous resistance at support before the next bull run. If we look at weekly chart here, same idea, right? We did get a clear break over this candle. Right now we're definitely just like right on the edge of it, so definitely on watch. Question for when you're done. Okay, let me get through these and I'll get to that. Tupperware. Tupperware is one that I've actually traded many times. I don't know why this one is here. But yeah, I've traded this one many times. This kind of goes hand in hand with happy wife, happy life, right? Tupperware, you know, my mother, my girlfriends, they've all loved Tupperware. Everyone who cooks loves Tupperware. It's just kind of like an under the radar kind of stock, but it's had some pretty great movement since its power earnings gap, and I think that was back in July. Let's go ahead and take a look actually, just to be certain. Yeah, right here. So it was July. Yes, I was correct. Cool. So we had the power earnings gap up and just consistent falling wedges and breakouts up until about November. Now we're just trading consistently in a range, and I've put this on my watch list a couple times. I've bought this support twice. I actually bought this one and traded it to here for a little bit of a gain, and also did this one as well, even though this was only like a 5% move before I stopped out. But we're once again approaching that, short-term resistance. And we also have earnings upcoming, I think on March 10th. Let's take a look. Yeah, March 10th. So we might get a pre-anticipatory run. I definitely want this to fall a little bit more. RSI still looks bullish. Volume is tapering off since the last breakout. Not necessarily a bad thing. When volume tapers off, you're usually it's usually in anticipation of a big move. Like, people aren't really for sure on what's going to happen. So for me, we have this tiny little shelf coming off here. I might buy the anchored VWAP or get a starter position and see if we retest this support. But I think this is a good little swing going into earnings. Not through earnings, but going into earnings. Their financials are absolutely insane though. If we look at the last earnings, they beat it by I think 300%. Yeah, 0.34 estimated, 1.2 actual. So great company, and there's nothing better than trading a great company with a great chart, right? Because I like charts, but if the fundamentals are there to back it, then even better. Speaking of fundamentals, this one, I don't even know about their fundamentals. It's so low. They have a trike, electric trike, but I do like the chart. We did play this kind of breakout here. Once we kind of coiled and the price action consistently showed support along this support trend, we got this nice break. We've kind of got the similar pattern going once more. We are once again on this anchored VWAP. I put a note here. I'm looking to add this at 760 to 780. I might actually go calls on this too, just because their volume is nice. But EV is hot. We're still respecting that 50-day moving average. Volume is tapering off, so we'll see what happens. The break above 849 is going to be pretty interesting, especially if we have enough volume to back it, like right here. I'll be looking for the volume to be at least at that level. You can see when we had a little less volume, we almost got that breakout, but we do know that this usually means a big day for solo. Laser. So my chart doesn't really show it well, so I'll go to the weekly. Okay, so there's kind of a couple different perspectives on this one. A lot of people are doing symmetrical triangle, and I think it's right. It's kind of hard to see with the weekly, but I'm seeing just kind of a bullish flag pattern as well. And in terms of the white support and resistance line, we definitely had a bullish close on Friday and a slight, I guess, quote unquote breakout. What I'm looking to see is a break of this trend line right here. We had these monster moves and then monster sell-offs. So I want to be sure that we're actually breaking over this trend line, because it'll be a point of confluence. There's two resistance trends. Just basically adds to my conviction. But this is definitely one that I'm interested in, and I think it's a SPAC. Okay, QCOM. This is the weekly. Yeah, we'll start here. Okay, so the weekly, we've got a broadening pattern. This was also on my power earnings gapper list. It's either this one or this one. I'm pretty sure it's July, because I've been watching this one forever. But you can see that we anchored a VWAP here to the trend reversal candle, and we've kind of come to approach that on the weekly. On the daily chart, we are looking a little less secure. Obviously, we dipped below that support trend, but you can see we've got this volume shelf forming, and this anchored VWAP, which is respected on numerous occasions. So we'll see what happens. I do like the buying volume here on Friday, and I do think the company is fantastic. You can get shaken out pretty hard here, though. They do have some wild movements. Kind of reminds me of JD or Baba. But I do like Qualcomm, and I think their earnings are coming up, so let's take a look. Wow, I can't type. Okay, they already had earnings. Even better, right? Okay, I do remember this now. So they had earnings, they beat earnings, and they sold off. So this is why I'm even more confident. Their fundamentals are awesome. I don't know what their projections are for next year, but regardless, this seems like a flash sale in my opinion, since we've been trading in this range for at least, what, 3 months? Yeah. Moving on to DocuSign. This is another one that's super interesting to me. DocuSign had this fantastic bull run in the beginning of the year. Actually, since 2019, look at that, almost a freaking straight line. But now we've been kind of testing or trading in this range for the past 6 to 8 months. And we're just now starting to see us approach that resistance once more. We did have this breakout here back in September, which resulted in a massive sell-off. But ever since then, we've just kind of been trading in this range. So for me, I do have a lot of software as a service companies long, but I really like this long base on DocuSign. It makes me think that once we break out of this long base, we'll have an equally long bull run. A lot of the FANG stocks, so like your Facebook, your Amazon, your Google, and all of them, are looking really bullish. You know, despite the fact that we're incredibly extended, the charts look really nice, and I think DocuSign kind of goes hand in hand with those big tech companies at this point, at least in the movements. I also kind of drew this cup here because although I have this channel, I can also kind of see this as a cup and handle if we can get that last leg down and then break upward. But once again, I won't play this one until we get a daily close over this resistance, kind of like we did here. And if we do end up getting a kind of fast sleeve false breakout, you know, I'll be prepared. OKTA. This one is nice. Okay, OKTA, Octa Inc. We have a double top breakout here. The thing that I really like about OKTA is that this is a consistent pattern that it not always has, but has had multiple times. So we had the double top breakout here, which resulted in this bull run, and then we kind of have this short-term support that it respected twice, and then now we've got the breakout over this this resistance point of 287.98. Let's go ahead and take a look at the weekly. On the weekly chart, you can see we're once again approaching the resistance. We didn't close over it, but we got a little bit of a wick tickle in the next level. So I'm very curious to see if we will take this and just, you know, explode upward. Obviously, there's a lot of interest in this stock. The institutions are all over this thing, so you know that's a big. We want to follow the money, and this has got a lot of big names on it. So this was on watch for me as well. Alto, I've been preaching this guy for a while. Unfortunately, my daily chart does not work, but my weekly does. So you can see here, let me move this guy. You see there we have the anchored VWAP to the reversal trend candle. And so we've had kind of this crazy bull run all the way up to a high of 1150, a sell-off back down. Let's see what moving average we're on. I would take a wild guess that's around 50. We're not going to be able to on the weekly. Okay, no big deal. So we've been trading in this kind of channel for the last couple months, since at least November. And just last week, we've kind of broke above this base. And as you can see, price by volume thins out up here. We've got a previous peak to look for. Volume has begun to thin out a little bit. Relative strength is still not too bad. I'm really bullish on this company. There's a lot of institutions adding it. And yeah, I have the anchored VWAP on the top candle as well as the trend reversal, so we can get that kind of pinch. You could see that we actually broke above it and then kind of treated it as support, and now we're on that upward move. So this is definitely one to watch. Okay, last ones that I'm going to go over before I take some requests is FANG. That is not FANG. I actually added Microsoft in here. Oh, did I? No, I deleted it. Okay. Let's go ahead and look at, we'll do Facebook last because I think that's the least convincing one. So Netflix recently had earnings. I think it was right here back on January 20th. I do want to confirm that. Let's take a look. Yeah, so we had the power earnings gap, January 20th. Sell off immediately to the middle Bollinger Band and then a continuation upwards. This, from a technical standpoint, is a long-term breakout. You can see that Netflix has been trading in this space since July of 2020, so we've got at least 6 months there. We did have the move and then the big sell-off below the resistance, which is kind of worrisome, but we've corrected pretty nicely. So what I want to see from Netflix is a retracement back to this resistance turn support and then continuation. We do have some buying volume, thin buying volume on Friday, so we'll have to wait and see. Amazon. Okay, so Amazon looks incredibly similar to Netflix in the fact that we had this kind of breakout of long-term 6-month resistance. We've kind of dipped back below it, but we did get some decent sized buying volume on Friday. So I honestly think we could see some bullish continuation on this depending on how the market holds up at these all-time highs. Google, this one's pretty, let's go to weekly here. This is way cleaner. Bullish pennant, and then finally broke that $2,000 mark off of earnings, I believe. This is, the all-time highs is the most bullish thing you could see on a chart, so I'm very curious to see where we find our new base. Apple is almost in the exact same boat, right? We had that bullish pennant on my daily chart. We actually had, it was a cup and handle, but right, so we had that beautiful 6-month cup and handle, and we had that fantastic week-long run up to 145. Now you can see we're forming a volume shelf here at 132. Yeah. The thing I like about Apple even more than a lot of these other ones is that you can see that we have these periods of downtrends, but every time you follow a downtrend on Apple, you have these equally as brilliant uptrends. So even this wasn't a downtrend, it was just a funky consolidation. But look at these moves, right? When they do finally break out of these bearish patterns or these flatline patterns, you get these monster moves. And this is going all the way back to like 2016 as well. Lastly, Facebook. So Facebook is the one that's kind of lagging in terms of the FANG stocks. They're going through a lot of drama regarding like censorship and stuff, but at the same time, Facebook is still big tech, and I think they're lagging behind the rest of them. So I'm super interested to see. I actually have calls for Facebook, long-term calls, but we'll see what happens. I think this is like the least impressive looking chart out of all these guys though. Apple, I'm expecting a pretty big move still from Google as well. Amazon weekly looks fantastic, right? We're approaching that resistance. We've been consolidating since July. It's like, what's 8 months, 7 months? And we've got this beautiful volume shelf forming. So if we see a weekly close candle above this 3350, 3380 zone, we could see a monster move because they've just been, pretty stagnant while the growth stocks have been dominating the market, or small caps as of recently. And yeah, Netflix's weekly looks very similar to that as well. And that's why I'm still, although people are screeching that the sky is falling and that we should expect 40% drops, these are really bullish patterns in my opinion. So I'm very curious to see if we're seeing a little bit of a rotation back into these big tech companies. Nvidia is the one that I'm missing here. I was wondering why that looked weird. Okay, so here's another bullish as hell one. We have a ascending triangle, flat top, resistance, angled support, weekly close over it. Nvidia has been trading in a range since August, much like the rest of these guys. So I'm super curious to see if we see a continuation, right? This is definitely a breakout, and I'm very curious to see if these other big tech stocks follow suit. Okay, that's it for the things that I wanted to cover, so I'm just going to go into the comments here and see if we have any requests for charts. Cornelia said, question when you're done, in your retirement account, do you have fractional or whole shares, and does it matter? I haven't gone long yet in my IRA, and as I finally just got my money back and want to get a certain amount before I start, because I don't think I have enough. So it depends, right? If you could do fractional shares, it's totally okay, just like the quote that I went over earlier, the best day to start investing is yesterday. Even if you buy at the absolute top, we're long-term investing here. It's not like that's going to be your only buy. You can average down if need be. If I were you, I would look at some of these charts. Like, let's just go. Like my biggest holdings, Fiverr and SE. I'll go daily. I have specific rules for each of them. For SE and Fiverr, it's very similar. If we drop to the 50 MA or the 65 MA, I buy immediately. I add, and so I've gotten a couple opportunities to do so. I have had this since like July. Just looks like right here. So I've added here. I added here. I actually added here as well. And now we've just been on this incredible bull run. So I wouldn't say just like don't look at a chart and buy something, regardless of fractional shares or shares. I would say at least look for some sort of pullback or some sort of blood to buy. You're just going to be in a better shape. And you know what? If the market just for whatever reason tends to crash, this is why we set stop losses, or hold it for the long run. We saw how quickly the market came back after the March dip. My mentality for everything in my retirement and my like long-term, my top 5 stocks, even if we crash back down to March levels, I'd probably just hold those and accumulate more. I'd be able to average down considerably. But I think it's important, you know, regardless of the amount of money you're putting in, don't just like immediately go and buy. Like, you don't need to do it right now and then, but kind of wait for a good, or like what you think is a good entry. In terms of, you know, how much money you need to get started, $1. You just need $1. It doesn't matter. I know there's a lot of people with smaller accounts that I've seen. You know, one of my favorites to see is King VT, right? When we first started this server, King VT had like $200, and over the last 8 months, he's been able to like triple that or quadruple that. So even if you think like, oh, I don't have enough money to get started, you know, just start. That would be my point on that. So can you please look into DBX, Dropbox? Ooh, I use Dropbox. That's interesting. I don't think I've looked at this chart before. Okay, choppy, definitely choppy. I'm gonna look at weekly. Looks like a cup to me, right? So we have this IPO, I'm assuming IPO back in May. I'm gonna go ahead and put this is what I call the IPO baseline. And I'm gonna go ahead and draw a little cup here, cuppy cup. And then we can edit this guy a little bit. Can I? Nope, not what I wanted. So to me, that looks like a cup. I really like that the weekly volume shelf right here, it looks like we've kind of bounced off of that already. We broke above it, retested it, and continuing on a bull run. I really like that we've got this volume gap right here. The fact that we've kind of bottomed out here and are, you know, trying to push higher highs and lower lows, I think this is a really good stock to keep in mind. I don't know what their financials are like, so let's go ahead real quick and look at DBX's earnings the last couple days, or excuse me, quarters. Last quarter we had $0 estimate, 0.26 actual, fantastic. We had expected a loss and a profit the quarter prior, and 3 quarters ago we once again beat earnings. So this might be a hidden gem that you've just found. This is something that's interesting to me. I think the next level to be, you know, incredibly bullish over would be this shelf break of 24.96. We're just below that. So yeah, I really like Dropbox. Good stuff. I'm actually gonna add this to this guy, or I'll keep a note. Options on those weekly picks. Yeah, this is something that I didn't mention to you guys when going over the overall markets in the beginning. Like I said, my long-term stocks and my ETFs, I'm not going to be touching in a pullback unless it's just like, you know, the sky is falling. I just don't see the need. It's not something that I'm going to be withdrawing from for the next few years. In terms of like my short-term accounts, which are like my option swings and my, you know, my share swings, the penny stock swings, I'm still sitting pretty heavily cash right now. You know, like I said, we're short-term extended on a SPY. I'm not expecting a huge dip like the October, November dips, really not. But I do think we need to come back down. And test this support. And then if we come down, test this support, our McClellan oscillator comes back down below the 0 line, I might be more interested in swinging some positions long. And on the other side, right, if we break above this short-term resistance and then retrace and then continue, well, shit, it'd be dumb to not go bullish. Breakouts are still the most bullish things in the world, but right now I'm sitting very heavily cash in my short-term accounts. Can you take a look at TSCRF? Yes, I can. The score. I was gonna say Fez score. This is pretty cool. Okay, so I don't know what these guys do. Let's find the moving average cloud that it respects the most, and I can already see that's the 20. So this is the 2050 MA cloud. You can see we've respected it on numerous occasions here. We're definitely short-term extended. But we did have this massive volume day on Friday, so we're gonna actually go into the 65-minute chart and see what's going on in the intraday stuff. Okay, so if we see the 65-minute chart, we get a little bit more of the ebb and flow, what's going on here. I really like that we have these kind of descending wedges. And then we had another one right here, although it was choppy, right? We can say descending wedge on top of the fact that we have this volume shelf. Right, so if I were to look to go long on this, I don't know what the fundamentals are like. I don't know why this is hyped. It is a penny stock, so you know there could be a million reasons for that. If I were gonna go long on this, I would definitely wait for the retracement back of this volume shelf at 397. Let's go ahead and see if they have any financials on Thinkorswim. TSCRF. Okay, so they don't have earnings or anything. Yeah, so this is just a high flyer with the current market, which is fine, totally fine. Just be aware that, you know, this thing is pretty up there. I don't know what they do. Score media and gaming. All right, well, you know, I'm not going to spend too much time on this. But yeah, that's where if I were going to go long on this, I definitely wait for a retracement of that 20 MA as well as the volume shelf here. The D King of Canada. Okay, that makes more sense. I mean, yeah, that's a super big sector right now. I told you, like, I'm super bullish on sports betting. I think it's going to come to the other states legal pretty soon. Just because, you know, governments, like local governments, can make so much money off of the like tax incentives. The score media I use there for apps for scores. Cool. Boxel unbiased. Dude, I like Boxel. I mean, I don't know, but I haven't looked at the chart in a while, but I've traded Boxel a crap ton. There's nothing wrong with it. So you can see we had that cut base that I drew back in, I don't know, December. And we've had this just monster move, and this looks incredibly similar to Vizzle. This reminds me of last May when everything was flying high on the small cap, I guess, sector, quote unquote. But we do have this bearish pull down happening here. We'll see what happens. I don't know what's going on with all these small caps. They're running like crazy. If we look like weekly, you know, we definitely have room to, you know, hit the moon, but we're not even as oversold as we were back in July. So low volume by price here. This could continue. It really could. We'll go ahead and take a look at Vizzle too, because Vizzle is another big winner for us, for those who got in. It's almost the exact same setup, right? I mean, a lot of the small caps just kind of look like this right now. All right, any more requests, guys? U and AMD. Okay. U is a little heartbreaker, but we are starting to see some buying. Very, very thin, but we are starting to see some buying. I like this company. I'm biased because I'm a gamer. I do like Unity for a long here. I think anything that you can get under the 50-day moving average is probably going to be a sale. We know IPOs typically will take 6 months to break their base. So this one came out in September, so we're kind of there. Although we had this big move in this consolidation, if we take a trend line and just kind of go like this, you can see we're just barely under that trend line. So we're still pretty bullish here. If we can get anything under this, I think it's a solid buy. So if you can get under 100, what was that, 37? Yeah, under $137, I think it's a solid buy. I would think of this as a longer term investment though. It's not a day trade or swing trade. But we do have this broadening formation. We broke below, so I created a second one off of this wick and these wicks, and it kind of seems to be respecting it. And a broadening pattern is bullish. So if we can retake the volume shelf here, get over this 131.49 mark, I think we'll go ahead and retest highs. I really do. A lot of institutions in this as well, if I'm remembering correctly. And then the next was AMD. AMD, very similar in the fact that we're in a broadening pattern. We broke below it on that kind of scary bear day. But look, we're already going to retake that pattern. So I am very, very bullish on AMD. I am a shareholder. CLIS posted in community. I did see that, Cornelius. Yeah, it's like a cup. Okay. We actually got a daily close over this 0.09 cents resistance, or previous historical resistance, which is pretty bullish. We have this big ass volume candle on Friday, incredibly bullish. And I think our next key level to break would be up here, and that's in the 15-16 cents mark. You know, short term, we're incredibly high on RSI, upwards of 80. Would I say buy this stock now? Hell no. But if you did get in down here when it started to uptrend, I think you're in good shape. And if we put the anchored VWAP to the trend reversal, you can see that we're very extended. But what if we do this guy here? This is also kind of a trend reversal. So if we see this, the candle come back down to the VWAP and drop below, that's where I'd be worried. So I can keep this now, and basically as the days go on, if we push this new anchored VWAP, I would say, okay, that's a sell point. And that's how I, you know, with a lot of my swings, I'll just put this anchored VWAP now. It's really, really nice, and it basically just tells me, okay, if we drop below that anchored VWAP, you could sell, take your profit, not risk losing it at all. I think it's fine. I just, you know, I wouldn't buy it up here. I don't know what they're doing either. Clickstream. I feel like this came up last year. Does anyone remember trading this last year? You've heard of SCR, the ticker, Banana? What is SCR? Oh, this is disgusting. Great addition of Banana. Oh, wait, that's FSCR. Ah, it's not even a stock. Great. Phenomenal. Do I have any other chart requests? TSNP, shut up. Let's get it. I remember this symbol. Tesoro. Maybe I don't. Okay, this looks cool. So this is a penny stock, no big deal. Let's do 65 minutes so we can see the intraday price action a little bit better. People ask me 65 minute and versus hour, why do I do it? And you know, I didn't know for the longest time. I just saw people using it compared to the 1 hour, and I finally realized that it gives you an even amount of candles in a certain day compared to the 1 hour, which gives you an odd. So kind of funny. This is definitely a bull flag. Falling wedge. 100%. We do have the volume shelf right here. We're actually below that current volume shelf. And that is a little bit worrisome. So yeah, we are below that volume shelf. It's a little bit worrisome. Volume has thinned out though, right? So the sell volume itself is thinned out. And like I said earlier, when volume begins to thin out, it's usually in anticipation of a bigger move. I do like we've got this tested support here on multiple occasions. 65 mile is going to be your best bet. This one I'd be on watch for too. I'd set an alert here. I gotta do an actual trend, but I would set an alert for a break above this kind of 149, 150 zone. Daily close would be bullish to me. I mean, we've seen tons and tons of penny stocks become $1 and then shortly after become $5. So it'd be naive to think that you can't, you know, play penny stocks right now. As you know, NASDAQ and NYSE has like what, a handful of penny stocks left. When you get a chance, look at SOS and EBON. I think I looked at both of these earlier this week. SOS, she's a moonshot. I don't know what they do. SOS Limited, this is an IPO, unless my chart is mistaken. This is our IPO base of $3 that we've tested a couple times here and broke below. This is the first time they're actually, you know, rocketing off of it. So what I would do here, this looks like a major trend candle, but that's gonna mess it up. So let's go with this one. Let's go here. So if I was gonna play this, right, I honestly would wait for a pullback to this VWAP, our short-term support trend. We do have a huge block of volume buys up here, which is kind of insane. But definitely short-term extended. Wouldn't choose to go long right now. If we did get a pullback to this $5 range and some consolidation, we definitely could make bigger moves. Let's see the weekly. Maybe my chart isn't. Oh, okay, so yeah, if I go to the weekly, this thing is this looks like a pump and dump. I'd be careful at SOS. EBON I've traded before. I know that's like a BTC play kind of. So IPO base is right here. Daily. Okay. Couple ways you could look at this. Couple ways we could look at this. The way I'm thinking right now is elongated falling wedge. We have this new uptrend that was formed starting this candle right here. We're trading below that. Actually, I'm gonna go back this up 2 candles. Probably gonna be the same. Yep. This breakout right here above the volume shelf at 689 is what would be interesting to me. With the way Bitcoin is going, I could be wrong. Maybe eBay International isn't Bitcoin related, but I'm pretty sure I remember that correctly. If we do break over this $7 range, you could see some pretty big highs, and you could see on Friday we had monumental volume. So we'll see what happens. Can you do DFFN next? Yes, I can. Diffusion Pharmaceuticals, Biopharma. This looks like a pump and dump. So if we look at the weekly, right, you could see this thing's gone through 1.5 million stock splits because it was worth, I can't even see that number, it's so small. But be very careful if you're going to be, you know, playing this. Just know that it's definitely a pump and dump. We did get huge buying volume on this thing on Friday, and I don't know what the hell that is about. But we're trading about right here. If I was going to look for an entry here, it wouldn't be up at this level. It would be at this kind of short-term support trend. Right? So you can see we're trading in a range. XSPA is kind of funny to look at. We'll do that. XSPA looks to be doing the thing that most penny stocks have been doing recently, where it runs up and then we get a falling wedge or a flag, and runs up, falling wedge and a flag. The only thing that worries me about XSPA is this volume to get to this level wasn't hit last week, so this could be tapering off. But in my opinion, almost every penny stock has run much higher than this thing. If we look at like, what was it, Boxwell and Vizzle, which in my opinion are like the same tier as XBA, they've both made a lot bigger gains. So this does have a lot of people behind it. My coworker has a shit ton of shares in this company, so we'll see what happens. It definitely looks like we're starting to form a new base up here, right? So this looks like a bullish pennant on the 65-minute. You've got a new volume shelf, right? So if I was going to trade XBA, I would be a buyer here at the 264 zone, and that's it. And then I'd play the breakout. It definitely looks like it's gonna make another move though, if you would ask me personally. Cool. Did you do Vizzle or ALPP or GILT? I did do Vizzle. I'll show you it real quick, and then I'll do the other two. Here's your Vizzle chart. We had the cut base breakout. Let's go to the 65-minute and see if I see upside potential. Okay, so yes and no. I'd be worried about the drop below this volume shelf. This also might be the buy point. It does look like we've kind of got this falling wedge forming. Pretty dramatic falling wedge here. So you know, if we get a good bounce here, we test this support, we may continue upward. RSI is not too bullish, not too bearish. Okay, and then the other two you said were ALPP. This thing's a monster. Is this a penny stock? Okay, yeah. So we'll go to 65 minute. Almost looks the same as the last one, right? The only problem is you could see what happened when we fell out of our volume shelf on this one. So this is what's going to happen if we hit any of these volume price gaps. You're going to get this massive gap down. So it looks like the new shelf is forming right here, but this isn't very, it's not a solid amount of shares traded. So I'd be very, very careful for a continuation and a drop all the way down to this 464 zone. But I would say give it a couple days, see if we treat this as new support, and then get a swing at it. And then we'll do GILT. This thing looks like a monster too. Oh, yeah. Okay, so immediately on the daily chart, be very careful. You're going to get a lot of volatility and a lot of big move days like this because there's not a lot of shares traded above this $10 range. Galat satellite network. So satellites obviously make me think space, make me think telecommunications, and make me think the future. So I'm not sure what's going on with this company or why they're up so bigly. Let's take a look at the weekly and see if it's actually okay. Yeah, so this isn't a pump and dump. I mean, it might be right now, but this is a company that's been around since 2015 and is finally getting some traction here. Would I buy at these levels? Hell no. Is this something to look for? Probably. I mean, I think the fact that it broke out, let's go back to weekly real quick. The fact that we broke above this line right here, which is like long-term resistance, multi-year resistance, that's huge. And you can see that the stock thought, or the buyers thought so too, right? As soon as we broke over here, we had that one day where we broke up and then closed above the volume shelf. And then we just had some massive continuation for a couple weeks. So this is really cool. It's a really cool one. Let's go 65 minutes, see if we're getting some sort of consolidation. Just treating the 50-65 MA as a pretty solid support on the 65 minute chart, which is nice. We've got a bit of a shelf forming, but it does look bearish in the after hours session. So you obviously be wary with the volume gap. You could get some big moves pretty quickly here. OZSC Energy Penny. Looks like a falling wedge. Let's look at the daily. All right, so this is a pump and dump, but that's okay. Let's take a look. 65 minute. So this one looks pretty bullish in terms of continuation. We got a falling wedge here. Right. We've got volume tapering off, so it's either going to make a big move up or a big move down. Looks like our shelf kind of begins right here. We had a bullish Friday, which, don't take lightly. This is your little volume shelf. Oh, how come that didn't work? There we go. Let's see, where's the reversal candle? Probably this guy will be better. Nah, okay. Yeah, we bounced off the 65 MA on Friday, and we had basically 2 days of consolidation. Looks like an inside day on the daily chart. This could continue upward for sure. Let's see. Lumen. I don't know how their earnings went. Profit, do you know how they did on earnings? I know they're trying to pivot towards like BER and rev. Cool. I know they are kind of making a bigger move into, there used to be like, I think it's, I'm gonna butcher this, wasn't it like like phone service, and now they're switching over to another basically business focus. But Lumen, so you can see we've got an established volume shelf here at 1158 to 1190. So if you were going to go long on this company, if you feel like they're going to be, making big changes or overall bullish, then sure, I think then the buy zone is probably going to be that 1158, and I would have a tight stop below it, right where we kind of dipped below the day before. This was one that I tried to trade. I actually got stopped out It did look like the Holy Grail setup with the 20 ma, the dip to the 20 ma after a big move. So I did buy this dip. I rode this up and then I stopped out around here. Did not blow up because of comparison to Q4 of last year, but look good forward looking. Okay, cool. HCMC, so people can see not to buy it. I'm all for it. Let's check it out. Nice. I love these candles. They look so enticing. Weekly. You should definitely have bought it when it was $6 trillion up here. I think that was the time to buy in. No, I'm just kidding. But if we go to 65 minutes, so we could see the little intraday movement. Oof. A lot can be said about this one, but I think I'll let you guys have the leave those thoughts to yourself. Let's go on to SIRC, last one for me, and STPK. I like STPK a lot. SIRC, daily chart real quick. Okay, it's a pump. Everything is pumping. Go to 65 minute. Not a lot of price by volume here. Although this kind of does look like it could be a wedge of sorts, it's so choppy. I wouldn't. It's not something I would trade. There's better penny stock pumps to find an entry on right now, but we'll see. SIRC is done. STPK. Okay, so I think I alerted this one down here on this sell-off, but this is a solar power company, and although the chart is a little bit scary, you can see we got that Jim Cramer pump on Friday that Eric was so happy about. But I think this is a good company. The buy-in spot is kind of not typical, kind of difficult here. The anchored VWAP doesn't really respect it that much. If we do the anchored VWAP to the major trend reversal candle on the daily, we can see we are a little bit extended, but I would basically take profits if it dropped below it. Financially, I don't know about what they're doing fundamentally, how they are doing. Hylian. Yeah, Jake is on this one actually, but so Hylian had that huge day followed by a massive sell-off back into that range that it's been trading into. So I think it'll be interesting to see if on Monday we retake this shelf, because if we do get a daily close over it, we could see a reversal. I'm gonna go look at Fisker real quick, because Fisker, I think we might be seeing a little bit of a rotation back into SPACs, because Fisker also had a big day on Friday and broke out of this range that it's been trading in. So it could be that the SPACs are coming back. Oh, on Monday, did I say on Monday? Whatever. NSPR, I actually traded this one before, back in July, I believe. She's been moving. Yes, she is a pump and dump. But there's no denying that this thing has moved. Looks like we have been having some trouble breaking past this resistance here. You can see that, over the last couple of years, 2 years, we've kind of stayed below that. So this may have peaked. That's a lot of buy volume. I don't know. There's a lot of liquidity in the market. This thing could continue. Wouldn't buy at these levels for sure. Okay. Are you long with STPK? I have calls for STPK. SPCE. This chart is a cool company, but this chart is kind of scary. Actually, it doesn't look as scary anymore because we have this big move, but before it looked pretty wild. So this was a SPAC. Virgin Galactic. Fantastic move upward off of this rectangular base. Back here we had this sell-off when the test flight didn't happen, so that resulted in a multi-day sell-off. We kind of retraced back to the 50-65 moving average cloud, and then we broke above that base and continued upward. If I'm really fishing for a pattern here, kind of looks like a symmetrical triangle is forming. I'm gonna go ahead and zoom into the 65 minute and see what we're looking like. So I really like the volume shelf that's formed here. You know, suggests support at these levels at this 54.31. We can look at this a couple different ways, but I think this is basically what I'm sold on here. RSI is, you know, a little bit into the over sold. SPCE could be a good long. We're just kind of high up right now. I feel like we'll probably get a bigger pullback, but I could be wrong. I mean, last time we had a monster move like this, we did have a pretty bad pullback. Let's go ahead and do, oops. This one's gonna be too low. So you could treat this anchored view up as new support. Okay, they better take CCX with them. I unfortunately still have those CCX calls, but that's just a crapshoot at this point. WAFU and then Opti. And then I am gonna wrap it up after these guys. If you have any last minute one, I'll do a couple more, but I'm gonna wrap it up here. WAFU. I think I could sneeze on a piece of paper and make a better candlestick chart than this one. WAFU Education Group, interesting. Not really much to say here. It did break out of its IPO base, it looks like, which was just over $5. Yeah, I don't really like this chart though. It's just you can't really identify trend too well. It looks a little choppy. Opti is no stranger to Templar trading. Awesome cup break, right? So we had this, you know, uptrend back from June in the summer. We saw Optech kind of gain some steam, and then we sold off while blue chips were running hot in November. Then we come around to December, and then people are like, oh, the small caps OTCs are heating up, and boom, rocket ship. So how long will the rocket ship last? I don't know. That is the question. Anchor view up there. We'll throw another one right here. So yeah, I would say if we could retrace this VWAP and then continue, then you might be in for some good tendies. Opti, middleman company, OTC stock, been in since 4 cents, sold 70% at 8 cents, was still holding 30%. Nice. HPQ, okay. HP Inc. Okay, makes sense. So like many big tech stocks right now, we're incredibly extended with the overall markets. It makes perfect sense. It's not really any surprise. We do tend to respect the 50-65 MA cloud. Typically, we did have this dip back in October, which we know November, October were tough on the large caps, but great continuation afterwards. So if I wanted to go long HP, you know, I don't know what the fundamentals are like. I don't know what their earnings are like. But considering we do test that 50 MA pretty regularly throughout the year, I think that would be your best entry. In NSPR since 40 cents. Let's take a look. And you're up almost 200%. If you're not taking profit already, I would begin to. That's just my thought though. D-King. DraftKings bullish pennant breakout. We got the beautiful retracement of previous resistance as support and then a continued bull run. If I go ahead and put the anchored view up to the main trend reversal candle, looks like we're going to test that right now. If we can get a buy along that anchored view up, I think this would be a great trade for long. I would not be surprised to see this take all-time highs after like 3-month consolidation here, or sell off to consolidation. So bullish on DraftKings. What is entry for HPQ? It lagged for me. Okay, I'll show you. So if you go to your daily chart on whatever broker you have, or even, well, I don't know, Robinhood won't do it. but you can do a 50-day moving average, and basically mine is a cloud form. So the top line is my 50-day moving average. The bottom line is a 65-day. So if we look at HP, you can see we typically respect that 50 to 65 day. So since we're already up so high, if I were you and if I were looking to invest in HP, I would definitely wait till we at least test that 50. Get a starter position at the 50, which for here, right now, or today, that's 24.89. But get a starter position in case you dip lower, for sure. But I like that. Already took profit. I have 30% of original. Beautiful. Love to hear it. I still have GNOG. How we looking? Not too good. Not too hot. Looks like our bottom, well, I mean, historical bottom is down at 17. Yeah, this isn't something that I would put money into. I mean, you could see this as kind of like a wedge, so I guess if we break above this point right here, we might be reversing into an uptrend, but I would wait for that. So if you get a daily close events above 1875, then I'd be excited, but until then, this doesn't look too promising. Fubo. Ooh, I like Fubo a lot, guys. Okay, so you could see we had this elongated falling wedge, kind of a holy grail setup. This wasn't as clean as we typically like them. Yeah, so this was not a holy grail actually, but this is, right? So we have a dip into the 20 MA and it dipped there twice and then we bounced. We had a buy day on Friday. This could be a good falling wedge breakout. So this is definitely on watch for next week. I like Fubo a lot. We could see a continuation to take previous highs. I like how we're respecting the anchored VWAP on the last 2 and 3 days actually, and yeah, you can see that price volume thinned out here, and then Friday we got a little bit of an uptick, but until we kind of touch that average, you know, won't be too crazy. GMBL esports. So they must have had big news recently. Don't know what it was. Esports Entertainment Group. I'm bullish on esports. Let's take a look at the 65 minute. I'm not TAing GME. I'm actually gonna ban that ticker in our chat pretty soon. I'm totally kidding, by the way. Maybe. Okay, so GMBL. We had a massive move last 4 days, and now we've kind of sold off on Friday. We've got this volume shelf that began to form with all these shares traded up above $14. So if you're holding GMBL, I would be very wary of this 1466 zone. If you fall below that, we've got a lot of volume by price gaps. So you can make a quick fall all the way to 1240 and then an even faster fall to 860. So just be aware. You know, obviously this thing was trading around the $7 range up until last week, so it's up considerably. If there is some sort of fundamental reason or, like, you know, partnership or something, then great, but right now this is pretty extended. And then I heard AESE. I swung that. I actually got stopped out of a trade on AESE recently, which is hilarious considering how it's ran. I think I entered down here and it was just taking forever. But this looks a lot like the Visuals, the XBAs, the Voxel, right? We've got this cup shaped bottom, and now we're just continuing to push newer highs. It looks like we pushed over the big chunk volume shelf of shares and then have fallen back into it. If we look at the 65 minute, we've got that volume shelf forming. Same idea as GMBL, which we've kind of already dropped below, but I'd be wary of a, you know, drop into this 275 range, because you could quickly fall to 250, which is a big percentage gain or loss, excuse me. ALUS. Interesting. Don't know why it pumped. Let's look at the weekly. It's not a pump and dump. Something's going on here. Okay. Let's see. Let's go to 65-minute chart. This green candle here in after hours looks pretty interesting to me. That's the first thing I noticed here, but we do have like this obviously descending channel. So, you know, if we do get a bullish reversal here on Monday, yeah, I mean, you can see with the RSI, something happened after hours to make them go up, and we are in the volume gap, so this could be a good, you know, quick little bullish move to capture on next week. The breakout point here is going to be between like 1297 to 1310-ish. But you know, you're incredibly extended. Maybe it's a holy grail setup, you know, it could be. That's a lot of volume, but we're definitely still in the middle of the sell-off. Did Ryan go over bingo? No, I can though, because that was a huge winner for me last week. Bingo. Although this has just kind of been running on the momentum, I believe, with the small caps in general. But you can see how lovely this thing has respected the anchored VWAPs as well as the 20-day moving average. We had a great bullish pennant, and on Friday we finally got the breakout that we needed on above average volume. So, you know, last time we had that breakout, it was like right here, then we continued upward, and we dropped, continued upward, pennant. And so I think we can measure the breakout distance by looking at the base of the triangle, right? I've taught you guys this before. Place it here. I think we could see, you know, upward highs of, what is that? I think $16-17. Lots of people bullish on bingo. BA, I liked BA. I had a short-term trade set up on BA here on this flag breakout, but I got stopped out, so I'm no longer in Boeing. I mean, I think we're still early on investing in travel and cruises and all that. I think we need vaccine everywhere and 100% working before these are like smart. I mean, if you want to get in now, I think this is a smart industry to maybe buy into and forget about for a couple of years, because we're always going to need aviation and travel, and obviously like vacation and stuff, so it makes sense just in a longer term perspective. Yeah, that's all I got to say about Boeing. Looks like a double top kind of. Yeah, so it rejected the top, so if we break over this, it'll be pretty bullish too. Am I still playing with WBA? Yeah, I still have my WBA. We had a bullish day. So this was a Holy Grail setup as well. You can see we bounced off the 20 MA and then kind of just used it as support for a couple days. We had that big sell-off day, the day after that we had the great entry, right? So this is the day that everyone, I would assume, bought in, February 10th. We had that massive run and then just a continuation down the next day. But we did see bullishness on Friday, and we're still above that 20-day moving average, so I'm still in with my position. If we get a daily close below that, I'd have to debate holding it any longer, just because, you know, I gotta follow my rules. But I think the thesis is right, and I like the volume we have at these levels. But the fact that we had this big move on low volume is kind of strange. Okay, WBA is good long. Yeah, I think long term you're fine. OSTK. I don't know why we would keep looking at this, dude. It's on the moon already. Let me draw it for you. That's fine. Can't even see that. Oh, there it is. One moon. We're there. We reached the moon on Overstock. Congratulations. We got him. Corsair I brought up briefly, but I'll do a full thing here. So okay, IPO base. This is one of the few IPOs that had a great run and is continuing to run pretty consistently. We've been trading in this range for the past 3-4 months since November. We had a couple tests of this short-term resistance. Last week we actually had a break over the point of confluence here, both this short-term resistance with the wedge as well as the channel resistance. I do like that we broke above it and we've now retraced back to the white resistance as support. I think we have a bullish continuation going into next week on Corsair, but we'll see. We're also well above the volume shelf at this level, so I think we could see a slow grind upward. Okay, I think I'm gonna end it. Oh, you want a dumb ticker, BOTY? Okay, this is my last one, and then we're gonna wrap it up. Because I got stuff to do. Yeah, pump and dump. Let's look at the weekly. Wait, Lingerie Fighting Championship Inc. Or Lingerie. Yeah, anyway, we'll end it on that one. Thank you guys for those who showed up. I really appreciate it. It's always fun to talk stocks with you guys. I hope you learned something regarding the long-term investing stuff. It was incredibly bare bones, but I did end up writing that up for my sister, so I thought a lot of people would benefit from it. I'm going to be pinning it to the resources tab, and then this video is also recorded, and I'll be uploading it to our Templar Trading YouTube. So thank you so much, guys. I assume that we'll be doing another stock talk next week. I've got no plans in terms of, outside world activities that I have responsibilities for, so I think we'll do another stock talk on Sunday. We shall see what the topic is then. But thank you all, and have a good rest of your 3-day weekend.